Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is March 3rd. Big moves in the market. We're going to take a look at Target. This is out of the consumer discretionary sector. Before we get too far in the video, if you can do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. Subscribe to the channel. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day, run it through my screener, see if it makes it through the criteria to make it onto my watch list. Just because it makes it onto my watch list, or if it does make it, it does not mean I am buying. It just means I'm interested in doing more of a deep dive into the financials of the company. There's the thanks button down below as well for anyone who might want to buy me a cup of tea. Really appreciate everyone out there who's taking the time to watch, comment, like, subscribe, and share the videos. The channel continues to grow because of people like you, and doing all that doesn't really cost you but a couple seconds of your time, but it does really help out the channel with the YouTube algorithm. So again, thank you so much. Now, this is the Vested Interest Stock Screener. This is the criteria we will be running the company through in the video. We'll see if it shakes out at the end. It must make 5 of 8 to make it onto my watch list. If it was a financial company here highlighted in green, we would add in price to book, with 1 being fair value, anything under 1 undervalued, anything over 1 overvalued. But that 1 is really 1 for price to book is really for financial companies out of the financial sector, like banks, insurance companies. Don't blindly use 1 price to book as fair value for other companies. You want to compare them to themselves over time, as well as other companies in similar sectors, right? So Target, you might compare it to Walmart, for example. All right, back to Target. Check them out on their homepage, www.target.com. That's www.target.com. That is their homepage where I pulled this information from. In 1961, Dayton's explored discount retail. You see here the press clipping all the way back in 1961. As the Dayton Company looked for new ways to strengthen relationship with guests, company leadership saw an opportunity to develop and introduce a new kind of mass market discount store that catered to value-oriented shoppers seeking a higher quality experience. Through visionary leadership, the company took the first step toward transforming its family-run department store chain into one of the nation's largest discount store chains. On May 9th, 1961, the Minneapolis Tribune reported that the Dayton Company planned to form a new discount store chain. The store's new president, Douglas J. Dayton, drew upon the company's vast wealth of department store experience and stated that the new store would combine the best of the fashion world with the best of the discount world. A quality store with quality merchandise at discount prices and discount supermarket. You can read the rest of that. 75 department stores is where they started. Obviously much more than that, and I believe they are in every state in the country right now. And as you can see, some of the things, right? Easter's coming up, so obviously they're going to try to sell you some stuff for Easter. Get your candy, your Easter baskets, that sort of thing. Women's clothing, men's clothing, kids' clothing, baby apparel, home apparel, furniture and stuff like that. Kitchen and dining equipment, electronics, video games, Apple merchandise, toys, sports and outdoors equipment, health and beauty equipment. Beauty is the next one. Household essentials, you know, your soaps, your shampoos, your laundry detergent, groceries, and stuff for your pets. And then they'll sell some stuff out to you on clearance as well. So if you want to know more about them, again, check them out on their homepage, www.target.com. I believe you can make orders there as well, and they probably would ship it right to your house. Most companies do that now. Now, the reason we were taking a look at them, down 2.78% on the day. Not the biggest drop that I saw for some companies today, but a drop nonetheless. So we're going to take a look at Target Corporation, ticker TGT. Closed out the day at $120.78. See that sell off throughout the day. The market overall sold off throughout the day today on Monday the 3rd. A big sell off. I don't think it's done dropping. I think tech is going to really get hammered here over the next couple of weeks, if not the next week anyway. But a lot of stocks got hammered today. So big drops in the market. This is one we're going to look at, though. 52-week range as low as $119.92, as high as $181.86, right up against their 52-week low. If they drop below 119, they may have a big drop coming in front of them. Now, they may bounce off this bottom here if that is indeed the bottom, their 52-week low. But sometimes they will bounce or sometimes they will bust through. So we'll see what happens here. But for today, big drop, 2.78%. Again, TGT is the ticker, and they are out of the consumer discretionary sector. All right, 52-week range we went over. Market cap we don't really, market cap of 55.343 billion, a beta of 1.18. So they are more volatile than the overall market, actually, at least right now. PE ratio, price to earnings, $12.81 is low for a company like this, though they are pretty well built out. So maybe that's a pretty good buy. EPS, earnings per share, $9.43 per share. Earnings date is actually coming up tomorrow. So big drop today, and if their earnings report tomorrow is negative, you might just see them bust through this 119. Or again, if they come out with some good earnings, you might see them bounce off this bottom and head back up. Really don't know until we see what those earnings are, but tune in tomorrow if you're interested in this company and check out their earnings report. Forward dividend is $4.48. They are quarterly payers, so divide by 4, though we will see that price per share per quarter here later in the video. Dividend yield of 3.61%. Nice starting dividend yield. Ex-dividend date, February 12th. Looks like they paid out their dividend on March 1st. So if you were to buy them now, you would be in line for the next dividend, but you're going to have to wait a few months to get it, right? They just paid out their dividend on the 1st. 1-year target estimate of $143.83. Doesn't look like they see them, at least according to Yahoo Finance, making it back to their 52-week high, but they do see some upside as far as price appreciation from where it currently sits. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation, at least according to dividend yield theory. Looking at their 5-year dividend yield average, 2.33%. We compare that to their current 3.61%, or over here where it says forward, 3.61, same number. And since it is higher and much higher, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio is low at 46.87%. I like under 75%. Dropping down to free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that free cash flow that we want them to be doing. They can reinvest back into the company. They can pay down debt. They can make acquisitions, which means buy other companies that are out there. They can buy back shares. They can pay a dividend, which this company does, and they can raise that dividend over time. So we want positive growing free cash flow over time. Going back to January 2022 here, you can see $5 billion in free cash flow. January 2023, negative $1.5 billion. So that's a big downturn from 2022 to 2023. Back up in 2024 there, January 2024, they reported out $3.8 billion in the trailing 12 months, which includes all of 2024 and a couple months into 2025 now, $4.5 billion. So at least from 2023 on, they've been growing. The trailing 12 months they've been growing, but that downturn in 2022 to 2023 would take them out of the running for 4 consecutive years of growth. Repurchase of capital shares. They are repurchasing shares. 2021 at 7.1 billion here. 2023 2.6. Nothing in 2024, but the trailing 12 months looks like they've reinstated those dividend buybacks, or those share repurchases. And they're at negative 506. So 506 million shares pulled out. Now you really want to compare this, right? Even though they're pulling out shares, you want to compare this to how many they're issuing as well. A lot of times companies will issue shares to their senior leaders, executives above, typically VPs, presidents, stuff like that. They'll issue shares to, and a lot of times there's rules around how they get to pay out those, right? They might have to sell them at different times throughout the year, but you want to make sure they're repurchasing more shares than they're issuing, right? They're pulling shares out of the market. Now, jumping over to stockanalysis.com, not affiliated with stockanalysis.com. They have 31 analysts that have taken a look at this. That's a lot of analysts. Typically, you might see 10, 12, 14, 31 analysts. That's a lot. So a lot of companies or a lot of analysts are watching this company here. They call it a consensus buy. Low estimate of $108, and that would represent a 10.56% decrease from where it currently sits. So they maybe see it busting through that 52-week low, right? Because it's right up against it at 119 and some change at 120.75 there. Average estimate of $159.45. This is a little bit higher than what we saw with the Yahoo Finance on the previous page. It would represent a 32.05% increase. 210 high estimate, that would represent a 73.91% increase. All the while, you could collect that 3.6% dividend yield, which seems pretty safe right now in the 48% payout range. I like to jump into statistics, look at return on equity and return on invested capital. This tells me how well the company is reinvesting its money back into the business. Return on equity at 32.37%. I like 10% or better here. They're at 32.37, so beats the metric I'm looking for there. Return on invested capital of 11.5, again, beats the 10% I'm looking for there. EPS growth forecasted at 8.01%. I like 5% or better, so good there. And revenue growth I throw in. It's not part of my initial screener, but this is part of a deep dive into the financials when I look at revenue growth. I want it growing over time. They're looking at 3.16%. All right, I do not have a position in this particular company. I would usually show that here. No position in this one yet. It is one that is on my watch list. They are a quarterly payer. Payout ratio, again, 47.51. I think Yahoo Finance had them at 48, right in that range. Still under the 75% I'm looking for there. Dividend growth is slow, 1.83%. 54 years of dividend growth. Buyback yield is negative, so we would like them to be doing a little better job buying back shares when they're cheap. Shareholder yield is positive at 3.66%. They do pay out like most companies do at March, June, September, December timeframe. Going back here to August 2022, $1.08 in dividends they were paying per share per quarter. Jump up to August 2023, they jumped it up to $1.10. And the most recent raise, August 2024, $1.12. That's that 1.83 you see there. And I would anticipate if they're going to continue this dividend growth, they will do it in August for the September payout. All right, let's wrap this one up and look at the vested interest stock screener. Understand the business. They're a retailer, right? They're selling you groceries. They're selling you apparel. They're selling you outdoor equipment, kitchen equipment. So they're selling you a lot of the same stuff that you can get at like a Walmart, right? Very similar company. Growing free cash flow? No. We had the downturn from 2022 to 2023. Is growing the last 3 years. Growing dividend? Yes. Slow growth right now, but it is still growing. Dividend payout ratio is under 75%. It's in the mid 40 range, so lots of room to continue to grow that dividend. Seems like it's safe. Check valuation based on dividend yield theory. Dividend yield theory says it's potentially undervalued right now, and significantly so. It is within 15% of a 52-week low, right up against it right now. Return on invested capital, return on equity are both over 10%, so check there. And earnings per share growth was 8%, so that's over the 5% I'm looking for. We're looking at 1, 2, 3, 4, 5, 6, 7 of 8. The only one it didn't get was growing free cash flow, and it was 3 of the last 4 years instead of the 4. So not bad. Looks like the valuation might be decent on this one right now. Might want to do more of a deep dive into the financials and see how this one looks. That is Target. Let me know what you think in the comment section down below. Are you holding Target? Are you looking to buy Target with the pullback? Or are you part of the reason it's falling and you are selling Target? Let me know in the comment section down below. Well, that is it for me. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Target you'd like me to cover in the Stock Pick of the Day series, drop it down below in the comment section, and any other questions you might have, that's where you want to put them as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, big drops in the stock market. This is the time you want to be looking at companies you're interested in buying. Figure out what price you're willing to pay for them. Get that cash ready to do just that. A lot of turmoil in the market, but this is where fortunes are made. And again, you want to be out there looking at the companies you're willing to buy or ready to buy. Figure out the price. You want to look at the financials, figure out the price, or get that money set them aside for the big drops for those ETFs and index funds you want to buy, right? You get a 10, 20% pullback in the market. That VOO might be a better buy, VTI, SCHD, VYM, SCHG, a lot of different ETFs and index funds out there. Like I said, as the NASDAQ pulls back, tech stocks pull back, you might be looking at something tech heavy. If the overall market, you're a stock market S&P 500 investor, you get that 10, 15% pullback. That's when you want to be investing, right? When you see that red, that means they're on sale, at least should be. And if you're doing your due diligence, understand the companies you're looking at and the prices you're willing to pay. This is what you're looking for. The big pullbacks are the time to be deploying that capital you may have sitting on the sidelines. All right, I'm going to get off my soapbox and head on out of here. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.